In this video I'm going to teach you 3 of my most favorite strategies for identifying support and resistance levels. First I'm going to teach you the inside candle strategy, then the fractal strategy, and lastly I will teach you the monthly and weekly level strategy. If you are new to my channel, welcome. My name is Bobby B and I've been trading crypto for a living for a very long time already. I'm currently trading on my personal 6 figures account, and on this channel I'm sharing with you guys everything that I'm learning along the way. Okay, before we jump to the strategy, I want to quickly talk about the basics so I make sure that we are all on the same page. So let's talk about what is support. Well, a support level is a level where more people are willing to buy than to sell. Let me give you an example. During this whole move down, the sellers were in control of the market until we hit a support level where, as I already mentioned, more people are willing to buy than to sell. Now, what is a resistance? Well, a resistance is a level where more people are willing to sell than to buy. Here is an example. During this move up, the buyers were in control of the market until they hit a resistance level where more people are interested in selling than in buying. That's it. That's what support and resistance levels are. For the one of you who are beginners, it's important to know that when a support level is broken, it becomes resistance. So you can expect that when price comes back to this level, it's not very likely to break above it from the very first try. So you can place a short trade and make some money because you expect that now at this level more people will be interested in selling than in buying. So you can absolutely enter a short trade with a stop loss above the resistance level, and as a take profit you can target the resistance down here, and as expected the price got rejected from this level and your take profit got hit. So that's how you make money. Now the opposite applies as well. When a resistance level is broken, it becomes support. So when price comes back to this support level, you can expect that it will bounce, so you can take a trade again. You can buy at the support, place your stop loss below the support, and as a take profit you can target the next resistance. Bam, that's how you make money again. Okay, here is something very important. That's a mistake that I see beginners make very often. You should think of support and resistances as zones, not single levels. What do I mean by that? Okay, so here is an example of what beginners do. They draw their support and resistances like this. So for example, this one is clear resistance. Now here it got broken, so obviously it turned into a support. Okay, so they will look into this and they will be like, oh okay, we got a candle close below the support, so it's now a resistance, and they will try to short this. They will enter a short here, they will place their stop loss above the resistance, and they will target the next resistance, and then this happens and they wonder why they are losing money. Well, they are losing money because their approach is wrong. As I already mentioned, you should think of support and resistances as zones, not single levels. This is the proper way to go about this. This is the exact same example, but instead of marking a single level, we have a whole zone that is a resistance. So when price breaks above it, this is now gonna turn into a support. Now you can start buying within this support zone and placing your stop loss below it, and that's how you win a trade and make money rather than losing a trade and losing money. Think of support and resistances as zones, not single levels. Now let's talk about why do we buy at support and sell at resistance. One of the main reasons for that is the reward to risk ratio. We have a very good reward to risk ratio when we buy at support. Why? For example, when you buy at the support here, your risk is gonna be the distance from where you are buying to below the support zone, because that's where you are wrong, and your reward is going to be all the way up here where the next resistance is. Another important point is that markets have a very long memory. Once you draw a support or a resistance level, you can basically drag it to the infinity. Here is an example with Dogecoin. This is a support, this is a resistance. You can see that these levels, which we draw all the way back in 2015, were still playing a very important role in 2021, right? You see that during this whole time Dogecoin was basically bouncing between this support and this resistance, going up and down, up and down, up and down. Now it's time for me to cover my most favorite part of this presentation, the 3 strategies: the inside candle strategy, the fractal strategy, and the monthly and weekly level strategy. So let's start with the inside candle strategy. That's how it looks like. I drew these support and resistance zones during this uptrend right here, and as you guys can see, they played a very important role during this bear market. This strategy as well as the others can do miracles if you master it. Now step by step I'm gonna explain you exactly how to use this strategy. Step number 1, you wait for a strong move. Doesn't matter if it's a move to the upside or a move to the downside. In this example we have a move to the upside, but then I'm gonna give you an example with a move to the downside as well. You just need a strong move. Then step number 2, identify an inside candle. Now this is where most people have hard time, so you should really pay attention to that. An inside candle is every candle which closes within the previous candle. We also want the inside candle which we pick to have high volume, and by high volume I mean above average volume. Then step number 3 is to draw a zone around the candle. Okay, so when you do this in real time and you are looking at something like this, at first you're not gonna know if this zone will be support or a resistance, but you will know that this zone is interesting and that's why you are marking it. Then what you have to do is just wait and see where price goes. In this case we got a candle close below the zone, so when you see this type of scenario you can instantly mark your zone as a resistance. The opposite applies if you get a candle close above the zone. In this case you can instantly mark your zone as a support. Okay, so here we got a candle close below the zone, so we know that it's a resistance, and as you can see this showed right away because price tried to go back inside the zone but it got rejected, and then we got a dump. Okay, but then what happened is that price went back within the zone, and at first it got rejected, but then we got a candle close above the zone. So in this case you can flip your zone to a support, because you guys already know that when resistance gets broken it becomes support. So since now this is a support, when price comes back to our zone you can absolutely place a trade here with a stop loss below the zone, and as a take profit you can target the resistance, and bam, that's how you make money. Now as promised, here is an example of the opposite scenario where we have a strong move to the downside. So this is step number 1, wait for a strong move. Step number 2, identify an inside candle. As you guys already know, every candle which closes within the previous candle is an inside candle, so this little green candle right here, this is the inside candle that we are interested in. But it's important for you guys to know you need to follow the steps in order. So step number 1, you wait for a big move like this, and then you look for an inside candle which has a high volume, as I already explained. So this is exactly what we are looking for. Then step number 3, draw a zone around the candle, and at first your zone is gonna be neutral until price breaks above or below it. In this case price broke below it, so this turns into a resistance. As you guys can see, this resistance was retested and it worked very well. So next time when this zone gets tested you can actually enter a trade. So you can sell short right here, you can place your stop loss above the zone, and as a take profit target you can target the resistance down here, and bam, another profitable trade with the inside candle strategy. Alright, now it's time for practice. You're not gonna become the best trader in the world just by watching YouTube videos, you gotta do the work. So pause this video and do a little bit of practice with this strategy to see how it works. Now let's move to the second strategy, which I call the fractals strategy. This one also works very well, as you are about to see. Again, we're gonna do a step-by-step process because I really want you guys to get this. Step number 1, identify a fractal. Now what is a fractal? Fractal is a 1 to 5 candle consolidation. Something else that is very important is for you guys to understand how the market moves, and that's how every market moves. Doesn't matter if you are trading crypto, stocks, forex, whatever, right? That's a universal thing. You have a trend, then you have a consolidation, trend, consolidation, trend, consolidation, trend, consolidation, trend. So all of these consolidations that we mentioned here, these are all fractals. Okay, but we don't just take any fractal for this strategy. We are only interested in the fractals that leads to trend in the opposite direction. So we have an uptrend here, then we have a fractal, then a downtrend. Just so that you see the difference, let me give you an example with the fractal that we are not interested in. This right here. So we have an uptrend, fractal, uptrend. For this specific strategy, we are not interested in this type of fractals. Now, after we identified the fractal that we are interested in this example, we gotta draw our support or resistance zone. We have a very specific way of drawing our zones with this strategy. For support zones, we draw the zone from the lowest candle close to the lowest wick, and I'm gonna show you how to do that in the next example. This example is for a resistance zone, and we draw resistance zones from the highest candle close to the highest wick. This is our fractal that we are interested in. We take the highest candle close, which is this green candle right here, and we also take the highest wick. That's how we draw our zone. Now let me show you the opposite example. Here is another fractal that we are interested in. We have a downtrend, then a fractal, then an uptrend. That's what we are looking for. So that's step number 1, identify a fractal. Step number 2, draw our zone. So this is a support zone, and as I already mentioned, we draw support zones from the lowest candle close to the lowest wick. So here is our fractal. This red candle right here is the lowest candle close, and then this green candle has the lowest wick. So this is what we use to draw our zone. Then when price comes back to our zone, we can place our buy orders, we can place our stop loss below the zone, and as a take profit we can target the resistance right here, and that ended up being a great trade. By the way, as you can see here, price visited our zone 2 more times but never really broke below it, and then we got this massive uptrend. Now moving to the third strategy, the monthly and weekly level strategy. As you can see, this one works very well as well. So for example, we got a dump right here to our monthly and weekly levels, then we got a bounce to the resistances right here, back to the supports, then the supports got lost, back to the next support, pump into the resistance, rejection, back to the support, pump into the next resistance. It works very well. So here is the step-by-step process for you guys. Step number 1, identify a pivot point. And by a pivot point, I mean a point where price stops. It's important for you to know that this is a monthly chart. I use this strategy on a monthly chart and on a weekly chart to identify the levels, and then I go on a lower time frame to actually take trades off of these levels. And that's what we're gonna do now. We're starting with the monthly chart. Let's identify all the pivot points. So this is the first pivot point. Why? Because that's where price stopped. You see, during this whole move, price didn't really stop, right? It is here where it stopped. Then we gotta move to a downside, so this is where the next pivot point is. Then I move to the upside, there's the next pivot point, move to a downside, move to the upside pivot point, move to a downside pivot point. And that's step number 1, identify the pivot points. Step number 2, mark the lowest and the highest candle closes. You basically are marking the pivot points with horizontal lines. So you mark the first pivot point, you mark the second, you mark the third, you mark the fourth, the fifth, and so on. You mark all of your levels. Now what's important for you guys to know is that I use one color for both support and resistances. Basically I use one color for my monthly levels and one color for my weekly levels. I use blue for my monthly levels and red for my weekly levels. So once I do that for the monthly levels, I then go and do it for the weekly levels, which we're not gonna do now because it's exactly the same. You basically just have to switch to your weekly chart and do this same process. However, you will mark your pivot points with a red line so you know which one is a monthly support and which one is a weekly support. And after you mark your monthly and weekly levels, step number 3 is to switch to lower time frame where you can actually take trades. Now, just like I mentioned in the very beginning, it's important for you guys to think of support and resistance in terms of zones, not single levels. So even though with this specific strategy we mark the levels with horizontal lines, I'm still thinking in terms of zone, guys. So for example, this whole zone right here, it's gonna be a support. This whole zone is gonna be a support, right? I'm not only looking at the lines, right? I know, okay, here there is a monthly support, there is a weekly support. So in this whole area here, I'm interested in taking long trades. Then in this whole area right here, I'm interested in shorting because we have a monthly and weekly resistances, right? Again, I'm thinking in terms of zones, not single levels. Now here are some other things that I want to teach you guys. This is what I call hammering the wall pattern. To understand this pattern, you have to think of support and resistance zones as walls. And just like if you get a hammer and stand in front of the wall and you keep hammering it, the more you hammer at the wall, the more likely is for the wall to collapse. The same thing happens with support and resistances. So this is a very powerful pattern that you guys really want to pay attention to when you see it. Consolidation under resistance is bullish. Consolidation above support is bearish. Now what do I mean by that? Well, here I have a couple of examples for you. This is a resistance right here which rejected the price here, rejected the price here, right? And it was a very strong resistance, as you guys can see, because we got these dumps after it was tested. However, on this specific occasion, everything was a lot different. You see how here the price kept going into the resistance, going into the resistance, going into the resistance, and consolidating right below the resistance. This is exactly the pattern that I'm talking about, hammering the wall pattern. And just like a wall, the more you hammer this resistance, the more likely it is to break. And this is Bitcoin, by the way, and I remember this time very vividly because everyone on Twitter was saying that we are about to dump. They thought we're gonna dump because we dumped on 3 occasions prior to that. They failed to see that this time was a lot different, and during this time, guys, I was long. I held during this and I made a lot of money. That was thanks to this pattern that I'm just teaching you right now, hammering the wall. Here is another example for the opposite scenario where basically price is consolidating above a support. When you see this type of scenario, guys, you can anticipate that the support is gonna get broken and there's gonna be a dump. This is again Bitcoin, and I remember that time as well people failed to see that. They thought this is the bottom right here, this is the $6,000 level. So a lot of people lost a lot of money during this dump right here because they failed to see it. Consolidation above support is bearish. This is again hammering the wall, hammering the support, hammering the support, hammering the support, weakening it, weakening it, weakening it, until eventually it gives up and you get this massive dump. Another important thing that I want to talk about is stop loss hunts. Now, what is a stop loss hunt? A stop loss hunt is when price trades briefly below a support zone but closes above it, or when price trades briefly above a resistance level but closes below it. Stop loss hunts doesn't happen by accident, guys. Stop loss hunts are basically a market manipulation done by whales to create liquidity so they can enter or exit their positions. By whales, I mean individuals or entities with large amounts of capital. When you have a large amount of capital, guys, you can't just market buy like a retail trader because you're gonna pump the market. You have to generate liquidity so you can enter or exit your position without moving the price much. How do stop loss hunts generate liquidity? Well, first of all, these hunts trigger retail trader stop loss orders. Whales know that all of the retail traders who are trading based off support and resistance will basically place their stop losses right below the support or right above the resistance. They also know that if price goes below this level, this will trick a lot of breakout traders. There are plenty of traders who will see price breaking below this and they will start entering shorts or longs if it is the opposite scenario. There is plenty of liquidity right below support levels and right above resistance levels. Whales know that, so sometimes they will push the price down to fill their buy orders right here, and then this is going to happen. And I'm showing you this pattern for 2 reasons. Number one, if you get stopped out and you identify that this is a stop loss hunt, you can re-enter your position because you can anticipate that this is going to happen. And number two, even if you don't get stopped out but you just identify the pattern, you can enter a trade because again you anticipate something like this to happen.